Good morning, traders. This is Chris Buss, your host over at Traders Profit Compass, with a morning look at markets. I see a lot of cross currents today. We've got gold spiking, $45. The dollar-yen currency pair that we talked about yesterday on the weekend look is crashing. It's taken out 3-month lows down to about 105, and that currency pair is a traditional risk-on, risk-off pair, and it breaking support is a huge warning sign in my book. Also, yields are falling, so bonds are rising. So we've got 3 risk-off assets: gold, the dollar-yen currency pair, and bonds, all signaling caution. That is against the backdrop of the indexes. SPY and IWM are up about 0.5%. The NASDAQ triple Qs is up nearly 1%. So we've got a disconnect there. That disconnect can go on for a while. It doesn't mean something bad is going to happen today, but it is signaling some caution. Just from a portfolio perspective, given that the FOMC meeting is this week on Wednesday, and the fact that we've got quite a number of the FAANG names reporting in the back half of the week, along with Boeing on Wednesday. To me, it's not a time to be piling in either long or short. I think it's a time for caution. I think it's a time to be looking to sell a rip or buy a dip, whatever the case may be. But I don't think you want to be sitting out there at this time just loaded to the gills, either long or short. I think it's a time to be relatively cautious on directional moves. Okay, let's look at SPY. This is a 2-hour look. To my eye, we had the down move last week, followed by a flat consolidation. To my eye, that looks like a flat bear flag. If you look at a projected measured move of this, if this were to trigger, I see price going down to support here at 314. And really what would be a heads up on that is a break below 319. So that is certainly a level to have marked on your charts. As it stands now in the pre-market, we are up here just under 322. If price were to pop 322, and certainly 323, that's a short-term buy. Really, the level for me, the bull-bear divide is 323. Bulls need to see price get back into this prior trading range to feel a relative degree of confidence. So again, for me, above 323 is short-term bullish. But as long as it stays below, I think it's short-term bearish. And if price breaks 319, I would be leaning on the short side. Taking this down to the 30-minute chart, you can see it a lot more clearly. We had the down move. We had this consolidation here between 322 and 319. A break below 319 triggers short entry, and looking for 314 on that break below. Above 323 is a short-term long. Moving on to the Qs. Here again, to my eye, this looks like a bear flag consolidation. Price is pushing to the high end of this. For me, 259 is the key level. Anything below that, relatively bearish. A recapture of 259 would be a bullish event, and traders could look for 262.5 on any move above 259. Moving down to the 30-minute chart, you can see the flag here. We did fill this gap, so I'll be taking it off the board after today. But I just wanted to show you the levels. A break below 255 would break this bear flag and point to a retest to 252. If we move 252, there's another gap down to 250, and then below that is an old reference high at 247. That's your measured move coming out of that flag, so I would be on the lookout for that. Again, just to recap, anything above 259 to me is bullish. Moving on to IWM, we can see price has been in this trading range between 145 and 150. A break below 145, there's a $3 gap to fill down to approximately 142, where we've got this uptrend line coming in. That should provide some support, but a break below 142 gives a pretty clear path down to 137. So your key level today is 145. Anything above that, I think the bulls are okay. They can look for a bounce back to 150. Any break above 150 should be bought with a target towards 155. If you're bearishly inclined, this took a pretty good rejection here at 150. That would be an objective place to try a fade with a tight stop. But like I said, anything above, you should be a buyer. So keep 145 in focus. Here's the 30-minute chart. You see that level 145 as being really important. We could go down here, tag it, and then bounce. Or if we break, filling this gap down to 142, that would be a great trade. There is a little minor support here at 144, but that shouldn't worry you too much. The key level is 145. If price were to recapture 147.50, I think you can buy that with a look towards 149 and 150. A couple of trade ideas or setups for you. Dollar Tree has a big $12 open gap above 100. I'd like you to alarm 100 for a potential break above. If it does take out 100, the trade is to get long with a stop somewhat below and look for a gap fill up to approximately 112. So I like that setup. Elsewhere, with Intel's drop on Friday of about 15%, there was a lot of gaps developed in the semiconductor space. AMD was a big beneficiary of Intel's problems. You can see the big wide range bar and gap up. I would alarm 70 and 64 as a bracket trade for today and going forward. Anything above 70 is bullish, and you can get long that level against 70. Anything below 64 is a short, looking for a gap fill. But one thing I'd want to add, since this range is so wide, $6, if it wouldn't be uncommon at all to see price fade off of this high and come back into the range. If you're an active, nimble trader and you see an opening, red bar this morning, I think you can try a short against 70 and look for a move back down into the range. But otherwise, for daily time frame swing traders, I would just look for moves above or below the bracket. And if you have some time today, you can sift through your semiconductor charts. There's a lot of gaps in there. A couple of the ones that I noted were KLAC, KLAC, AMAT, AMAT, Taiwan Semiconductor was another one. Cuervo, QVRO was another one that gapped. So there's a lot of gap setups. I also had a gap on Tesla, and IQ was a big gap, and also EHTH had a big gap as well. So if you alarm those levels on those gaps, you should have some nice, interesting second day plays. So again, for today, watch those risk off assets, gold, bonds, and the dollar-yen currency pair, all flashing risk off, and watch your key levels on the indexes, either breaks above or below for short-term trading opportunities. I hope the video helped. Please hit the like button if you like the content, and subscribe to the channel. Take a look over at the Traders Profit Compass blog. There's a lot more detail in my morning note that you may want to read and get filled in on. Otherwise, this has been Chris Bus with Traders Profit Compass. Have a good trading day.